Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. Last video I have explained the concepts of GST like composite dealer, unregistered dealer, SEZ, mixed supply and composite supply. All these things are under unit number 3. In this unit I am going to explain you two topics. The first one, which is very frequently asked in examination, that is differences between mixed supply and composite supply. And secondly, recording of purchases made from unregistered dealer. So how to make the accounting entries, how to record the transaction when purchases are made from unregistered dealer. That's what I'm going to explain you. So before starting the differences and this expression of purchases, take a screenshot of the points which I have written on the board. Now, first of all, the differences between mixed supply and composite supply. This will be frequently asked in short question. Already the details we have discussed in the last video. So here mixed supply, composite supply. There are many cases where the supplier will supply a combination of goods and services. The problem will arise in order to calculate the tax rate, the GST rate, which rate to be applied when there is a combination of goods and services. For that purpose, the GST has made a classification of mixed supply and composite supply. So what are the differences? First, it refers to the supply of goods and services in combination for a single price by taxable person. So mixed supply, it's a combination of goods and services for which a single price will be charged by the supplier, by the taxable person. Here it refers to supply of combination of goods or services which are naturally bundled and supplied together during the ordinary course of business. Naturally bundled, that means we are not, separate it. We cannot sell it separate. Naturally we have to bundle the goods and services and sell it to the customers. So here it does not have any predominant element. That means in the combined goods, we cannot say which is the principal and which is the secondary good. There is no predominance element of goods and services in case of mixed supply. But in case of composite supply, it consists of principal supply which acts as a predominant. One of the item of goods or service will be predominant. That means main item, primary item. One of the item of goods and services may be primary and the other items may be secondary in case of composite supply. But there is no such of predominance goods and services in case of mixed supply. Third difference is it is not naturally blended. We have blended and sell it to the customers. But in case of composite supply, there is a natural blended, naturally bundled. Now, the highest tax rate applicable on either of the bundled goods or services is taken as tax liability calculation. While calculating the tax liability, we take the highest rate goods in that bundle of goods, in that combination of goods. For example, 3 goods are combined, mixed up, A, B, C. The tax rate of A, B, C are different. A, the tax rate is 28%, B, it is 14%, C, it is 10%. So what is the highest rate among all the goods? 28%. So we apply 28% on the mixed commodity, mixed goods. So the highest rate of the component good, of the bundle goods will be taken for calculating the tax liability in case of mixed supply. But in case of composite supply, we see what is the highest, what is the rate for the principal item in the combined goods. In the combined goods and services, what is the rate which is applied on the principal item, principal goods, not secondary good. The tax rate applicable on the principal supply is taken for tax liability calculation. These are the differences between mixed supply and the composite supply. Now, the second item which we are going to discuss is what is the procedure of recording purchases made from an unregistered dealer. So recording of purchases made from unregistered dealers. So first of all, who is an unregistered dealer? The unregistered dealer is that dealer whose turnover is less than the recommended prescribed threshold for registration under GST. So business, whoever wants to register themselves under GST, a threshold is prescribed, recommended amount is prescribed by the GST. If the turnover is more than the threshold, then only that person will get it registered under the GST Act. So unregistered dealers have aggregate turnover lesser than the recommended threshold for registration under GST. Suppose the GST has made, the threshold as 20 lakh. If a person has a turnover of 20 lakh or more, they have to get themselves registered. This is called the threshold. So if a person is having the turnover less than 20 lakh, he is called an unregistered dealer. Unregistered dealer. Then unregistered dealer cannot issue tax invoices. They can neither charge tax nor claim input tax credit. Already we have discussed this point in the previous video also. They cannot issue tax invoices. They cannot charge tax from the buyer, from the recipient. And also they cannot get the benefit of input tax credit, ITC benefit, they won't get. So these three things you have to remember for unregistered dealer. So unorganized sector, that means in order to ensure that tax is collected on the sale of goods or services from various unorganized sector, the government introduced the reverse charge mechanism. When goods are purchased from unregistered dealers, then from where to collect the tax? From whom to collect the tax? The supplier is not collecting the tax because the supplier is unregistered dealer. So supplier is not collecting the tax. Then whom the tax should be applied? For that purpose, the government has implemented a scheme called reverse charge mechanism. So according to this reverse charge mechanism, under this, the recipient or buyer of goods or services have to pay the tax. The buyer, the recipient of the goods has to pay the tax on behalf of the supplier. And unlike in the forward charge where the supplier is liable to pay tax, normal circumstances, when goods are sold by registered dealer, the registered dealer is the supplier. They will make the invoice, tax invoice, they will collect the tax on behalf of the recipient and pay the tax. That is the forward charge. That is the normal procedure. But in case of unregistered dealer, the tax cannot be charged by unregistered dealer. So the buyer, the recipient has to pay the tax on behalf of the unregistered dealer and pay to the government. The key change is the shift in the responsibility of paying the tax, which has moved from the supplier to the buyer. Main difference between registered and unregistered dealer is this only. In unregistered dealer, there is a change in the responsibility of paying the tax. Instead of tax being paid by the supplier, the tax will be paid by the buyer or the recipient of the goods. That is the main key point of difference. Now, we have to explain what is the procedure when goods are purchased from unregistered dealer. So with the help of an example, I am going to explain you the procedure. First of all, example HAK Trading, a registered dealer, purchased goods from RB Trader, who is an unregistered dealer. RB Trader is the unregistered dealer. HAK Trader is a registered dealer. Suppose my business is HAK Traders, your business is RB Traders, and you are unregistered. My business is registered. I have purchased the goods from you from arbitrators, I have purchased the goods. So when I have purchased the goods, I have to pay the tax GST on behalf of you. That means HAK traders will pay the tax on behalf of RB traders. So in this case, HAK traders will pay the tax on behalf of RB traders and avail the input tax credit. By paying the tax, I will be getting the benefit of input tax credit. Now illustration. Accounting of purchases made from unregistered dealers. How accounting will be made in Tally ERP 9 when purchases are made from unregistered dealer. So with the help of an illustration, we'll try to understand. Date particulars, July 2nd, 2019. Voucher purchase. XYZ traders have purchased the following goods from ABC Company Telangana, who is an unregistered dealer, with the supplier invoice number 002. Example. Here XYZ trader is a registered dealer. And XYZ traders are purchasing the goods from ABC Company, which is an unregistered dealer. So ABC Company is the seller, unregistered dealer, and the buyer of the goods is XYZ Company, which is a registered dealer. Now particulars. Printers have been purchased, 5 printers, rate 6,100, total amount 30,500. So what is the item of goods purchased? XYZ purchased printers from ABC Company. The cost of each printer is 6,100. 5 printers are purchased. So total amount is 30,500. Now on July 4th, that means after 2 days, this XYZ company will pay the tax, because the goods are purchased from ABC and ABC is unregistered dealer. So the recipient or the buyer of the goods is paying the tax on behalf of ABC. So voucher payment, XYZ traders made payment of tax to the government on behalf of unregistered dealer. This is the situation. Now how to record the transactions in the books of XYZ traders for purchasing the goods. Here, step 1, creating the following ledger accounts. First of all, ledger accounts for purchasing the goods from ABC Company, which is unregistered. So what are the ledger accounts to be opened? First, ledger name details, ABC and Company, under sundry creditors, and type of sundry creditors is unregistered. First account to be opened is ABC Company account. This ABC Company account will be under the group of sundry creditors, and the type of the customer is unregistered. Secondly, purchases from unregistered dealer. This account will be opened under purchases account. So under purchase account, purchase from unregistered dealer. Type of supply, goods. We are purchasing the goods. Now this is the first step. Now you have to remember 2 notes. First, tax is calculated based on the state and registration type. Ensure that these fields are defined appropriately. So before opening this account, you have to ensure that tax rate is defined appropriately, because the tax rate depends on the state and the nature and the registration type. So be sure that the rate has been clearly given. And note, we can define the GST rates while creating purchase ledger. One more important point we have to remember. While preparing the purchase account, we have to define the tax rates, define the GST rates, by enabling the option set alter GST details to yes. While preparing the purchases account, we have to set or alter GST details to yes. And then we are not configuring here because the GST rate is confined at the stock item level. GST rates are already specified in the stock item level. So we cannot be able to change now. Already we have set it under stock item level. So these 2 notes you have to remember while making this ledger accounts. So we have discussed the meaning of the term unregistered dealer, and with the help of an example I have explained this. The first step we have completed, how to create the ledgers. So we are discussing about the purchases from unregistered dealers. So unregistered dealers are those dealers whose aggregate turnover is lower than the recommended threshold for registering under the GST. So if any the dealer is there whose turnover is below the recommended limit for registration under GST, then the dealer will be called unregistered dealer. In that case, the unregistered dealer cannot issue the tax invoices. The unregistered dealers cannot charge the tax GST, and they cannot get the benefit of input tax credit ITC. So these are the problems with unregistered dealers. So government has made one mechanism called reverse charge mechanism, where a person who purchases the goods from unregistered dealers, the buyer has to pay the tax on behalf of the seller. The seller is unregistered dealer, so the buyer has to pay the tax on behalf of the seller. Unlike in the forward charge, the seller will pay the tax GST and they will collect the tax from the buyer. But in case of unregistered dealer, the buyer has to pay the tax. That is the procedure for purchases made from unregistered dealer. So how the purchases will be recorded? What is the procedure of recording the purchases made from unregistered dealers? So here I have taken one illustration. See carefully here. Particulars are voucher purchased. XYZ traders have purchased from the following goods from ABC company. So XYZ trader is a registered dealer and they have purchased the goods from ABC company, Telangana, who is an unregistered dealer with the supplier invoice number 002. Imagine our company is XYZ company, which is a registered one, and we are buying the goods from ABC company, which is an unregistered dealer, so with an invoice number of 002. So details are, we have purchased the printers, 5 quantity we have purchased, 66,100 is the rate. So total bill amount is 30,500. These are the details. And July 4th, voucher payment. XYZ traders made a payment of tax to the government on behalf of unregistered dealer. So second date, July 2nd, the XYZ company has purchased the goods from unregistered dealer. And on July 4th, the payment has been made. The GST is paid by XYZ company on behalf of ABC company, unregistered dealer. Now, step by step, I'll explain you the procedure for recording the purchases from unregistered dealer. Step 1, create the following ledgers. So first of all, before entering the transaction, we have to create the ledger. So name of the ledger, ABC and company. This is the supplier. And under sundry creditors, under the category of sundry creditors, then type is unregistered. This ABC company will come under unregistered. So we have to create one ledger account. The ledger account of ABC company under the category of sundry creditors, and type is unregistered. Secondly, purchase from unregistered dealer. So under the category of purchase account, and type of supply is goods. So these are the ledger accounts we need. So now we have to remember some notes. Tax is calculated based on the state and the registration type. Ensure these fields are defined appropriately. So before making the ledger account, you have to be clear regarding the tax rate, because tax rate will change from state to state. And also it ensure and the registration type. So ensure that all the fields are correctly, appropriately filled up. Then note, we can define the GST rates while creating the purchase ledger by enabling the option set alter GST details to yes. So if you want to enter the tax rates, you can enter the tax rates here in the purchase ledger by enabling it set alteration GST detail to yes. We are not configuring here because the GST rate is configured at the stock item level. So we will assume the GST rates were already assigned at the stock item level. So now we are not giving the GST rates at the ledger account level. This is the step number 1. Now step number 2. Recording taxable purchases from unregistered dealers. So how to record, what are the steps involved? The first, go to gateway of tally, select accounting vouchers, press F9 for purchases. Then click F2, second step, click F2, date and change the date to 2nd July 2019 because we have purchased on 2nd July 2019. Then third, enter the supplier invoice number as 002. Already we have decided supplier invoice number is 002. And the date field will be automatically filled as voucher date. Then select ABC and Company in the party account. We are purchasing the goods from ABC Company, which is an unregistered dealer. So select here ABC Company in the party account name field, press enter to get party detail screen. So automatically the party details will be shown. Accept party details screen. Once if you are confirmed, you are seen the party details, then accept it. Select the ledger purchases from unregistered dealer. Now you have to select the purchases account from unregistered dealer. In the name of the item field, select the printer. What we are purchasing? We are purchasing the printers. So select printer from the list of the stock items. And then enter quantity as 5 and the rate as 6,100. Then the amount will automatically be calculated. Once if you enter the quantity and rate, the total amount will be automatically calculated. Then press enter twice. Everything is confirmed. Simply press enter twice. It will be saved. Click a tax analysis to view the tax implication in this transaction. Last one, click F1 for detailed information. That's all. These are the possible, steps to be followed under step number 2. Recording the taxable purchase from unregistered dealer. Now step number 3. Recording the journal voucher to generate liability and input tax credit. To generate the liability and input tax credit. Since the unregistered dealer can't collect the tax, when a registered dealer purchases from an unregistered dealer, he raises the liability on behalf of the registered dealer. When we purchase the goods from unregistered dealer, the unregistered dealer will not collect the tax, will not pay the tax. In that case, the buyer has to raise a liability on behalf of unregistered dealer and pay the tax to the department. The registered dealer can then claim ITC, input tax credit, for the tax paid. So only after creating the liability and paying the amount on behalf of the supplier, then only the buyer can be able to get the input tax credit advantage. Now create the following ledgers. 2 ledger accounts you have to create. First for central tax and the second for state tax, because GST is there for central as well as state. So first of all, create central tax ledger. Under duties and taxes, and select the type of duty as GST. We have different types of duties. In the duties, select GST and tax type central tax. It will ask you tax type. So select the central tax. Let percentage of calculation be 0%. Rounding method as not applicable and press enter to accept. This is the first creation of central tax. Now second, create state tax ledger. First ledger, central tax ledger. Second one is state tax ledger. Same way. Under the duties and taxes, and select the type of duty as GST. Exactly similar. The tax type, state tax. Here we have selected central tax. Here it is state tax. Let percentage be 0%, rounding method as not applicable, and press enter to accept. That's all. So 2 ledger accounts we have created, one central tax and another state tax. To record the adjustment entry, go to gateway of tally, then accounting, then vouchers, then F7 for journal. Then click F2, date, and change the date to 2nd July 2019. Click J, statement for adjustment, and enter the details in statement adjustment screen. That's all. So this is the complete procedure of recording the purchases from unregistered dealer.